If you spend any time online, you've probably seen a very specific picture of day trading. It usually involves a laptop on a beach, working an hour a day, and clicking a few buttons to afford a very fast car. But the reality of the markets is far less forgiving. Beginners often lose their entire account in a matter of months. They approach the market like a casino or a video game, placing bets and hoping for the best, rather than treating it like a high-performance profession. To understand how professionals actually operate, we have to look at what day trading really is. This animated timeline represents a single trading day, from the morning open to the afternoon close. A day trader executes a buy and a sell entirely within this short window. They hold no positions overnight, capturing only the short-term movements of the price, and their daily risk resets to zero by the time the market closes. Because the window of opportunity is that brief, success isn't about looking into a crystal ball to predict the future. It requires leaving the gambler's mindset behind and adopting the daily routine of a professional athlete. Think about a professional athlete preparing for a championship game. They would never walk onto the field without studying their playbook, putting on their protective gear, and spending hours reviewing the game tape from their previous matches. Day traders have to adopt this exact same routine to survive. The financial strategies they use are their playbook, their risk management rules act as their protective gear, and their trade journal is their game tape. The goal in this profession is almost never to take more trades, it is to take better trades, and the only way to find those better trades is by ruthlessly studying your own past performance. Survival in the markets comes down to having strict rules that protect your money and a system to review your missteps so you stop repeating the same expensive errors. Let's start with the playbook. Professional traders do not guess which way a stock will go. They execute specific, rehearsed setups, like buying when a price breaks through a ceiling, or entering after a brief dip, moves that last for minutes or a few hours. But the market moves fast and things go wrong. Taking a loss often triggers a deeply emotional reaction. A trader might try to immediately win their money back by doubling their position size. This is called revenge trading, and it is the fastest way to drain an account to zero. This chart shows our first layer of defense, the stop loss. The descending trend line hits a rigid threshold, acting as an eject button. Pulling back, 3 eject events hit a daily loss limit ceiling. A lock drops, freezing all activity, preventing a career-ending day. Professional traders treat this protective gear as non-negotiable infrastructure. They understand that protecting the capital they already have is always their first priority. Making profits comes second. So if everyone knows they need these protective rules, why do so many beginners still fail? The simple answer is that, in the heat of a fast-moving trade, emotions bypass logic. To fix those emotional errors, you need a digital coach to hold you accountable. You need to review the game tape. This is where a tool like TradeZella comes in, providing the necessary business infrastructure for day traders. This dashboard shows exactly how that works. Instead of just logging numbers in a spreadsheet, TradeZella tracks the human element. You can see tags for fear of missing out, revenge trading, and overtrading sitting next to performance metrics, showing exactly where bad habits bleed money. Systematic journaling replaces stressful, random guesses with a measurable dataset where you can isolate your exact weaknesses. To spot weaknesses, use Trade Replay. A static chart makes every exit look obvious, hiding real-time panic. Instead, the chart rewinds and plays forward tick by tick, simulating erratic live movement. Pausing at a dip, a visual marker highlights the exact moment the trader gave into fear. Once you identify a mistake like that, you can use a feature called backtesting to fix it. Before risking real dollars, a trader can practice their playbook against years of historical market data to prove their strategy actually works in that scenario. By combining replay and backtesting, you ensure that every time you enter the market, you risk your capital on proven skills and refined habits, not blind hope. Ultimately, day trading is a highly specific profession. It is for individuals who can maintain intense focus, follow strict rules under pressure, and find enjoyment in navigating active markets. On the flip side, it is highly dangerous for anyone chasing fast money, letting their emotions drive their trading decisions, or refusing to sit down and review their losses. Long-term survival in this field requires professional discipline. The winners are simply the ones who manage their risk and constantly review their game tape to fix their leaks. Professional software provides the specific data points you need to identify and fix the mistakes standing between you and consistent profitability. So stop trading in the dark and start reviewing your game tape today. You can get 20% off TradeZella by using the link in the description and start treating your trading like a business.